What's up, guys? Stacy here from Becoming Financially Fit. Today, we're going to be talking about an interesting topic. There's been a lot of speculation in the news recently about Amazon, more specifically about how Amazon is planning on doing a stock split in 2021. While I may not have all the details around the rumors of the stock split, I will be able to give you guys an explanation about how stock splits work, why Amazon may be thinking about doing a stock split in 2021, and then I'll talk about the recent surge in Amazon's stock price of about 13% as a result of these stock split rumors. The video might be a little long, so what I'm going to do for you guys is add chapters to each one of the different sections we're going to be talking about today, so you can sift through and find the perfect section that you want to review. But before we get into the content, I make videos about personal finance, financial literacy, savings, investing, and I also try to throw some entrepreneurship in there as well. So if you're interested in any of those topics or you want to see more videos like this in the future, make sure you subscribe to the channel and don't forget to hit the bell to be updated anytime I post new content. All right, let's get into it. So the first question you guys might have is, how do stock splits work? And there are two main types of stock splits, a forward split and a reverse split. In this particular video, we're only going to be discussing forward splits because in this particular example with Amazon, that's probably going to be the split that they pick. If you guys do want to see a video about reverse stock splits, drop a comment below and let me know. A forward stock split is a corporate action where a company can effectively decrease the price of their stock price while simultaneously increasing the value of outstanding shares held in that particular company. Because there is a corresponding stock price decrease with an increase in the number of outstanding shares, the value of the company remains unchanged. So there's no change if the stock price goes down because the number of shares goes up. So now let me give you guys an oversimplified example of how a forward stock split would work with a hypothetical company and hypothetical stock prices. Let's say you currently own one share of company ABC and right now it's trading at $100. That means the total value of that position is $100 total. Let's say the next day they decide to do a stock split, a forward stock split, which is 2-for-1. And they say that they're going to be giving shareholders 2 shares for every 1 share that they currently hold. This will mean that in exchange for my 1 share valued at $100, they will give me 2 shares valued at $50 a piece. So in this particular example, you can see how previously I had 1 share worth $100. Now I'm going to have 2 shares worth $50, which means my total position is unchanged in each one of those pre-split and post-split scenarios. I still have $100 worth of the company, but now after the split, I would have 2 shares rather than just 1. So now let's talk about why companies even think about performing stock splits. Well, it's super simple. Most companies know their consumers and they know their investors and their shareholders. And they know that a shareholder is more likely to purchase a stock if it's worth $20 rather than if the stock is worth $3,400. The ability to invest in fractional shares has changed this viewpoint a little bit, but that is only available to discount brokerages like a Robinhood or something like that. Most leading brokerages still don't offer the ability to allow their customers to purchase fractional shares in companies like Amazon or Apple or Tesla. So the higher stock price is a little bit of a barrier to entry in terms of investing in a company like an Amazon. I know a lot of retail investors out there would love to see the playing field leveled. And for a company like Amazon, which the share price is trading for a little over $3,400 as of the recording, a lot of individuals aren't able to make that purchase. So they look for other companies within that space or similar companies that they can purchase for at a lower price point. So stock splits are an effective way for companies to level the playing field for all investors, including retail and institutional, while keeping all else unchanged. So now let's get into how to make money from a stock split. In that previous example, you saw how even though we went from owning 1 share to 2 shares, our value never changed. So for example, let's say you purchased a share of a company right before it split, and then after you receive additional shares because of the split that took place. You essentially don't change the value of your position. So you're not technically making money from this particular stock split. You're just gaining extra shares, but your position value is going to stay constant. In recent years, more retail investors and new investors in the market have been seeing stock splits as an opportunity to maybe use some arbitrage and get in and make a little profit and then immediately sell. I'll give you guys a perfect example of this. The company Tesla, which announced a stock split, a 5-for-1 stock split on August 11th of 2020. That's when the price of the stock was trading for around $275 post split, but at the time it was trading for around $1,375. On August 31st, when the stock split took place, the shares were trading for $2,500, which would mean that was an increase of over 80% just from the announcement of the 5-for-1 stock split. So, can you make money from a stock split? Well, the answer is yes and no. If you're just holding the shares and you get additional shares for the shares you already own, then your position value is not going to change. But because retail investors have been hyping up companies recently due to stock splits, this may be an opportunity for you to look at, especially for a company like a Tesla, an Apple, or even an Amazon. Lots of people have asked me the question, has Amazon stock ever split? And for a lot of retail investors that recently started investing in the past couple of years, they probably wouldn't know the answer to this question. But Amazon, like any other company, has split their stock in the past. In the past, Amazon has split their stock 3 times. The first took place in June of 1998, and the second 2 were in 1999, first in January and then in September. For its first stock split, Amazon offered 2 shares for every 1 share held at that point in time. For its second split, Amazon switched it up a little bit and offered a 3-for-1 stock split. For its third and final stock split, Amazon went back and did another 2-for-1 stock split. So these are going to be similar to the examples that we discussed earlier, where for every share of a company you hold, you would be able to exchange that for 2 new shares at a lower stock price. Looking back on Amazon's corporate actions, let's see how many shares you would have after these 3 stock splits took place. So let's say you purchased 1 share of Amazon at the IPO, and then they initiated a 2-for-1 stock split. So after the stock split, you would have 2 shares. You exchange your 1 share for 2 shares at a lower price. They then did a 3-for-1 stock split, which means that for every share you had, you would receive 3. So after the first stock split, we now have 2 shares. After the 3-for-1 stock split, we now have a total of 6 shares. The last stock split that Amazon did was 2-for-1. Now we have 6 shares, and they're going to give us 2 for every 1 we own. So after the end of those 3 stock splits, you would essentially have 12 total shares of Amazon, and the price would consecutively go down lower and lower each time the stock split. So now let's talk about what would the Amazon stock split price be. In my personal opinion, I think Amazon would benefit from a stock split because it would lower their share price dramatically, and it would also allow a lot of retail investors to start to get invested in the stock. I think something like a 30-for-1 stock split would be good. It would bring the price of each share to a little over $100, and it would allow a lot of retail investors to immediately get invested into the stock. Like I said earlier, a lot of retail investors would rather pay about $100 per share of a company like Amazon rather than $3,400 per share, because if they just purchase 1 share and let's say they have a $5,000 portfolio or a $10,000 portfolio, it's going to mess up that diversification. So bringing it down with the 30-for-1 split to a price around $100 would be a great option for a company like Amazon. So now the question is Amazon going to split their stock in 2021? And I think the chances of this are going to be 50-50. Over the long term, I think the company and its shareholders would benefit from a lower stock price because it would allow a lot of retail investors to get invested into the stock while leaving pretty much the fundamentals of the company relatively unchanged. But now I want to hear from you guys. Do you think a company like Amazon will split its stock in 2021? And if so, what do you think the conversion rate will be? Do you think it's going to be a 2-for-1? Do you think it's going to be a 30-for-1 like I think? Or do you think it's going to be even more than that? Drop a comment below, and if you get the answer right to if they're going to do a stock split or not, or if you get the conversion rate, I'll make sure to give you a shout out in one of my next videos. But if you got some value from this comment, make sure you give this video a thumbs up. And also, if you want to see more videos like this in the future, make sure you subscribe to the channel and don't forget to hit the bell to be updated anytime I post new content.